Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, February 16th, 2024. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the daily time frame of the ES. Very narrow range right now heading into the RTH Open. About 20 points of range, 42% of average as the market awaits pre-market data here. Very shortly, in about 80 seconds or so, we have building permits, PPI, housing starts coming out. Later on, after the RTH Open, we do have Michigan consumer expectation and Michigan consumer sentiment. But right now, PPI could provide a bit of a boost for the market. We have an upward trending move here, again, coming out of the bullish Pima trigger zone, as we've seen multiple times already this year. 1, 2, 3, 4 times this year after establishing that bullish Pima trigger zone in Q4 during the Q4 rally. And we've seen it just continue to produce this entire time. Despite big, heavy-handed days down, we've seen this thing just snap right back up. And this is no different here. So very bullish overall. Again, with PPI here on deck here in about 25-30 seconds, we may get a little bit of volatility. Even if it's to the downside initially here, it could be an opportunity for bulls to defend into that weakness for a shot at continuing this thing higher. This market continues to expand here until proven otherwise, and just really can't go down for long spells right now. The YM does have the ability to see a bit more selling pressure than the ES and the NQ, but again, this market remains quite bullish with this bullish Pima trigger zone continuing to produce, and until proven otherwise, this is the bullish Pima trigger zone to continue to trade. So it is still quite bullish. Now right now we are seeing PPI come out 0.3% versus a 0.1% forecast. The previous was a negative 0.1%, and right now seeing a little bit of selling pressure on that news. Again, with this pullback, we could find an early morning low and start to see a bit of a bounce back to the upside. Keep an eye on the previous session's midpoint. That's going to be an important area right there. That's the 50-31s. Any pullback into that zone could still be an opportunity for bulls to defend and push this thing back up. Day after day, we've seen very narrow price range action and then finishing strong. Narrow range of price action, finishing strong. We could continue to see that type of behavior here today as this market remains in an uptrend since the strong lows here developed on Tuesday. We take a look here at the NQ. NQ also seeing a little bit of selling pressure here on that news. Not very strong at all, but again, a little bit of an initial pullback. Again, since the Tuesday low here, we've seen a very clear upward bias. We've seen higher highs, higher lows. This market also has seen very quiet price action for most of the session and then squeezing late in the day. Quiet price action, squeezing late in the day. This early pullback could be met with bullish defense here near the previous session's midpoint. That midpoint right here is 17,874s. Any pullback into that zone could still be an opportunity to buy. So given the uptrending market that we're seeing at the moment, this morning pullback here could provide an early pivot low for a turnaround and a checkmark move higher into the end of the week. Again, until proven otherwise, this market continues to find a way to bounce back out of the bullish Pima trigger zone. Any failure there would need to really take out the prior pivot lows. We've mentioned that time and time again, and we just haven't seen that. So a failure would really need to power through that prior pivot low, really attack the 34 and 55s, and then change direction here, especially with a break at the previous month's midpoint. Right now, we're not seeing anything even remotely close to that. If we pull back, again, could be a sign of a buying opportunity late in the day. Find the morning strong low for a turnaround checkmark move higher. Taking a look now at crude oil. This one had quite the bounce back in the previous session. Huge reversal back up the day, and what that did there was it really helped define this range right here. You have strong lows that come into play at about 75.50. You have the strong high at about 79, and you have this box here And with two strong pivot edges, one here on a Wednesday, one down here on a Thursday, that could lead to mostly range-bound action near the center of the range here today. We have an inside day developing at the moment. It's still an upward bias overall, and if you look at the wider view here, this has developed a wider rounded bottom with about 79.80 as the rim of that pattern. So this continues to develop quite a bit of strength. Initially, to begin the year, we thought this was the rounded bottom here. It kind of came back deeper, and it continues to build on the right edge. So still quite a bit of energy being developed in crude oil. At some point, a breakthrough 80 will open up a move that takes us into 91.5, 92s, maybe even back up to 95s down the way. And but until then, right now, we are stuck in the range. We could continue to see back and forth price action today. Inside day, still an upward bias, but very clearly unable to push through the 79.80 zone at this time. Once it does, it could be a massive transition day that really takes us higher. Transition day would be similar to this here, where it really pushes us from the upper market structure into the lower and begins a process of trading in that lower market structure. This would be a transition up that takes us higher back into the upper market structure where we begin to trade up in here. Until then, we're still range bound and can continue to chop around at the center of this range here. Now taking a look here at gold futures, this one at the moment showing quite a bit of weakness overall from the recent highs at around 2080 and got to move all the way across the range into 2000. It also hit the FOMC key level from December 13th and is now trying to bounce a bit off the lower end of the range. Now, if this market's going to continue to remain in this range, we're likely going to see this morning pullback met with strength. Again, selling pressure here on the early PPI number. Now again, with this early sell-off here, can prices find a strong low? We're seeing selling pressure still in the ES, the NQ. We'll look at the YM here in a moment as well. Gold also seeing that selling pressure in kind. And again, on the pullback here, want to be able to find a strong low this morning. Yesterday, the breakout point was 2010. We're back at that point. This is a zone that bulls really want to keep bid for an attempt higher. If not, again, 2000 is where this thing starts to break down. And really, it hasn't wanted to break below 2000 in a while. It only barely tested it here a couple of days back, and it hasn't tested it since back in December. So 2000 remains a tremendous area of support. It continues to build out in this range here, which is, again, very compressed range. Perhaps we're starting to break down now, but 2000 is where it really falls. If it fails through 2000, you start to open up a path that can take you back toward 1900 or even lower. Until then, right now, we're stuck in the range between 2000 and 2080 with a midline at 2040. Giving up 2040 opened up 2000, and right now, bulls want to keep this early pullback bid. And if so, we could be working our way back toward 2040 early next week. Lastly, taking a look here at the YM. YM also experiencing a bit of initial selling pressure here on the PPI number, but still remains in a very bullish overall move. This one had perhaps the biggest sell-off here. This one in RTY a couple of days back on a Tuesday here. Heavy-handed selling pressure, but failed just shy of really breaking down through market structure. This move right here took us right back to the previous year's high, which is also the top of this trading range here. It broke through the top and has held ever since, and now we have a nice little box that has developed above that level. So again, if this market is going to fail, it needs to push through this pivot and through this line, which would open up the lower edge of the range between 37K and 37.3. Until then, right now, we're still trading in this upper range with an upward bias. You can continue to see that this thing is being defended in the bullish Pima trigger zone at every turn along this way, and has been quite bullish overall. So again, a little bit of a fade after trend day here today. Yesterday with a great check mark move higher. Today, a little bit of a fade after. Bulls want to defend into the midpoint here to finish this thing strong. So can these markets form a strong pivot low this morning after this early selling pressure? If so, we could be looking at a return back to the overnight highs and perhaps through those highs heading into the end of the week. All right, that is it for now. We'll see how this develops here heading into the weekend. Have a fantastic weekend. Please be sure to like, share, and subscribe, and I'll see you in the trading room. Take care.